On Monday, December 10th, Alphabet announced a breakthrough in quantum computing. Its chip called Willow solved in 5 minutes a computing problem that would take a classical computer more time than the history of the universe to solve. That's incredible. And so this advancement has investors excited about quantum computing stocks as potentially the next artificial intelligence type of trend for investors. So, in this video, I'm going to compare two quantum computing stocks, IonQ and Quantum Computing Incorporated, to answer which one I think is the better investment for long term investors. Of course, these are very risky stocks and should only be for those that are looking for the high risk, high potential investments that could potentially explode in 5 or 10 years or so. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, when we compare these two on revenue, we see a big difference here. IonQ has roughly 10 times the trailing 12-month revenue as Quantum Computing Incorporated, Qubit. With 37 million in trailing 12-month revenue, IonQ is well ahead of Quantum Computing Incorporated. However, Quantum Computing Incorporated does plan to advance its manufacturing facility in Tempe, Arizona in the first half of next year, and the company expects that facility will drive some incremental cash flow for the company to get it to the point where the market starts to be ready to digest its innovative technology. So the next thing I wanted to compare these two on is their market cap. And as of this recording, IonQ has a much larger market cap at 6.5 billion compared to quantum computing at 751 million. But these are volatile investments, as you notice here. Look at that big boom for IonQ stock, jumping from roughly $1 billion in market cap up closer to $8 billion in market cap. And it's just lost about $1.5 billion in market cap in the last couple of weeks or so. Again, as I mentioned in the beginning of the video, these are very volatile, very risky investments that have huge potential upside. So it's a high risk, high reward investment. Be ready to experience these kinds of swings multiple times over the next few years. All right, I also wanted to check the balance sheets. Look at how much cash and how much long-term debt the companies have. And comparing IonQ, it has $30 million in cash compared to Quantum Computing, which has $3 million in cash. And then looking at long-term debt, IonQ has zero long-term debt, while Quantum Computing has $6.5 million in long-term debt, more than twice its cash balance. So looking at just the balance sheet alone, IonQ has the much stronger balance sheet, more fortified, can sustain through more difficult times because it has zero long-term debt and it doesn't have to worry about paying back any debt commitments for now. So now that we looked at the cash balance, we also got to look at the cash flow from operations. How much cash are they burning through to develop this technology and prepare it for commercial application? Quantum computing, it burned through $17.5 million in cash from operations over a trailing 12-month period. Although the company's enhancements and improvements had increased, or I shouldn't say increased, I should say decreased the negative of cash outflow in the latest quarter. They did show a roughly 15% improvement in the cash outflow in the latest quarter. So management is taking care to reduce those losses in cash flow because they understand their balance sheet is troubled and they don't want to go to investors in a desperate situation for more money. Companies like this, it's better for them to go to investors right after they announce some major achievement, some major milestone that they hit. And then, usually after they announce that kind of milestone, the stock price jumps by 20, 30, 40, 50% or so. And that's an opportunity to sell some shares and get some capital to give it money to get themselves to the next milestone. Or they can also go to lenders and borrow money after making that achievement because lenders will now feel a little bit better about the company's prospects because the share price has improved and because they surpassed another milestone. IonQ also improved, although its cash flow is more negative, just like its revenue is more negative. Its cash flow is, just like its revenue is larger than quantum computing, its cash outflow is larger than quantum computing, negative 93 million in trailing 12-month cash flow from operations. Although, again, you can see a slight improvement here. Too early to call this a trend, but good to see that at least the declines have stopped and it moved upward. Let's see if this continues for another couple of quarters, and then we can call it a trend and we can say, hey, IonQ, if it continues this way, it can at least be self-sustaining, and that will be a big positive for investors. But let's look at the cash compared to the outflow. So quantum computing 17, IonQ 93. Quantum computing has only $3 million in cash compared to the 17 million in losses, or roughly 1.5 million per month. It has about 2 months of cash on hand. That's a really narrow timeline for cash on the balance sheet. Meanwhile, IonQ has $30 million. Its negative was 93, or in other words, roughly 8 million outflow every month. And so IonQ has about 3 months, 3 to 4 months in cash, but it also has zero debt. So IonQ has more cash runway than quantum computing, although they are both approaching levels that I would feel uncomfortable with. So, and they have been raising capital, they have been selling shares of stock to raise capital. So they need to continue to do that. If there is an opportunity to raise more capital, they should definitely capitalize on it and raise the capital, fortify that balance sheet further. All right, and lastly, let's look at the valuation. IonQ is trading at a forward price to sales of 78, while quantum computing is selling at a forward price to sales of 500. This could be because quantum computing has that facility that's about to come online. They've invested a lot getting that facility online, and IonQ is further along in generating revenue compared to quantum computing, which had 1/10 the revenue of IonQ. So, if I had to pick between these two high risk, high reward investments today, I would pick IonQ because it's further along in generating revenue, in finding commercial applications for its technology. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.